Hello, do you know why your financial statement has never balanced before? Good. So, in preparing your profit and loss, it's not all the expenses that we need to include in a particular accounting year. And then also, not all the revenues that we are supposed to include in preparing our profit and loss for a particular accounting year. So, which means that there are some revenues that will not relate to the accounting year that we are considering, and there are some expenses that do not also relate to the accounting year that we are considering. So there is a need for us to do adjustments. So that is why we do adjustment of entries in accounting. Okay, so I'll be taking you through one of the adjustment of entries and then relate it to the accounting principles and conventions, because I told you the accounting principles and conventions, they are the fundamental principles, rules, and regulations that guide the action of the accountant. Okay, so let's go through a first one. So, adjustment of entries, I've already explained. I want us to consider the first adjustment that we mostly do in accounting. So, the first one is accruals, owings, or outstanding due. Okay, so in accounting, if we are saying that something has accrued, then it means that we have not paid for it. We are owing the expenses. So in accounting, what it means is that if you consider a particular year, okay, and then there is an expense that you are supposed to pay. Let's say electricity bill is $1,000 and you only paid for $500. Then the $500 remaining is the expenses accrued, the expenses that you are owing. So the mere fact that you have paid for $500 does not mean that for that particular period, electricity expense is just $500. The $500 is just the one you paid for, and the remaining $500 is the one you couldn't pay for. So in accounting, I taught you one accounting principle, which is the accrual concept, which says that in determining your profit for the year, expenses, whether paid or not, should be matched against revenues, whether received or not. So accounting is telling us that it is not always it is not, sorry, only the expenses that we have paid for, but the ones that we didn't pay for should be added to the expenses that we have paid for in order to be able to determine our total expenses for the year. Now, as I said, accruals or owings, they are is the same as owing, is the same as outstanding, is the same as due, is the same as accruals. So sometimes you will not see owings, you see accruals, you see outstanding, you see due. It is referring to the same thing, or they are referring to the same thing. Okay. So now let's look at this question. So we have a trial balance. Now in accounting, the moment you see a trial balance like this, and we have an amount in a trial balance with respect to a particular expense. So for this one, we have rent and rate, and the rent and rate is $1,500. Okay, so any transaction that you see in a trial balance, it means that it has been paid for. So if any transaction has not been paid for, then the information will be given to you under the additional information, or it will be at the bottom of the trial balance. So rent accrued during the year amounted to 500. So it means that during the year, they actually paid for just $1,500 dollars with respect to rent and rates. But then they are owing 500 at the end of the year. So what you have to do is that the expenses for the year is not only the one we have paid for, but it is both the one we paid for and the one that we did not pay for. So we just add the 500 to the 1,500 and report it on the face of our financial statement as 2,000, being our rent and rate that will be reported on the face of the financial statement when we are determining the profit. So these are some of the petty adjustments that we need to do in accounting in order for our balance sheet, in order for our profit and loss to reflect the correct figure. Thank you very much.